Are you overwhelmed by all the health insurance jargon? Well, let's go over some of the more common terms in this How Health Insurance Works video. Remember, if you have employer-sponsored group coverage, then definitely approach your HR department with any questions or concerns. Your health insurance is too important to not make 100% informed decisions about. However, you can also reach us in the comments below if you have any questions. And of course, if you're looking to enroll in a plan, you can reach us at the number on the screen, and there is no charge for our services. First, let's talk about monthly premiums. Now, these are fairly easy to understand because your monthly premium is the amount that you pay monthly to keep your insurance active. If you don't pay your monthly premium, then you won't have insurance. If you have group insurance through your employer, this will likely be automatically deducted from your paycheck. Now remember, you can't judge a plan based on premium alone. A higher premium doesn't necessarily mean a better plan, and a lower monthly premium doesn't necessarily mean a worse plan. But generally speaking, you will notice that PPOs tend to have higher monthly premiums and HMOs tend to have lower monthly premiums. Now, you may also be eligible for a premium tax credit if you purchase your plan through the marketplace. A premium tax credit is just a tax credit that is paid up front, and this is reflected in a discounted monthly premium. You may be eligible based on your income and your household size, and you can find out if you're eligible for a premium tax credit by answering a few simple questions on healthcare.gov. The next term to understand is the deductible. Your deductible is the amount that you have to meet out of pocket or at full cost before your insurance begins to contribute to the cost share. Now, you should know that there tends to be an inverse relationship between premiums and deductibles. Usually plans with higher monthly premiums will have lower deductibles, and plans with higher deductibles will have lower monthly premiums. That being said, there are often a lot of services that are covered even prior to meeting your deductible. Generally speaking, these would be things like doctor's visits, a trip to the urgent care, prescriptions, etc. Usually, that deductible is going to more so apply for services needed in an inpatient or outpatient setting. Now, not only are many services covered prior to meeting your deductible, many are covered at actually no charge. Usually, these would be preventative and wellness services. And of course, these are all detailed in the 10 essential benefits. Now, if you do have group insurance through your employer or a marketplace plan, then they must offer you at least those 10 essential benefits. Marketplace plans must offer at least the 10 essential benefits, and then you can purchase additional coverage for things like dental and vision rather inexpensively if they're not already offered by your plan. And of course, even though those 10 essential benefits are required, many plans offer additional benefits to entice beneficiaries. Then there are copays and coinsurance. These are the charges when you actually utilize your insurance. A copay is a fixed amount, so it's very easy to understand. You might have a $25 copay to see a specialist, a $50 copay for an urgent care, and $250 for an emergency room visit. And those should be outlined on your insurance card. Then there's coinsurance. Coinsurance is a variable amount, so it can be a little bit trickier. For example, your coinsurance might be 25%, which means you'd be responsible for 25% of the cost. So of course your bill is going to be determined by the actual cost of the procedure or service, and then that 25%. Now, if you've seen those metal tiers on the marketplace, these are actually indicative of the coinsurance or cost share. There are bronze plans, silver plans, gold plans, and platinum plans. And many people are under the misconception that this has something to do with the quality of the plans, and that's absolutely not true. It's not as though platinum plans are the best and bronze plans are the worst. It's just how the coinsurance breaks down. So a bronze plan will have a 60-40 split, which means your coinsurance is 40%. Silver 70-30, which means your coinsurance is 30%, gold 80-20, which means your coinsurance is 20%, and platinum 90-10, which means your coinsurance is 10%. Of course, this is just usually how it breaks down. And the last term I want to talk about today is your out-of-pocket maximum. This is the maximum that you can be billed in a plan's calendar year. Now, in 2024, the maximum out-of-pocket maximums for an individual is $9,450, and for a family, it's $18,900. Now, of course, you are much likely to find these much higher out-of-pocket maximums in a catastrophic coverage plan or a high-deductible health plan. If you have a more traditional insurance plan, it's likely that your out-of-pocket maximum is going to be much, much, much lower, especially if you have employer-sponsored group coverage. Basically, if you have extensive medical needs in a given year, This is there to protect you from major medical bills. So if you do hit your out-of-pocket maximum, then your insurance carrier is going to take on the remainder of those covered in-network services for the remainder of that plan's calendar year. If you have questions, you can reach us in the comments below or at the number on the screen. As I said, there's absolutely no charge for our services. As always, thank you so much for watching. Make sure to like and subscribe to stay up to date, and we'll see you next time. Bye-bye. If you want to learn more, make sure to check out our Ultimate Insurance Guide video right up here. We'll see you next time.